All right, and we're here. Chris, good morning.
We're here. Good morning. Good morning to you. Let me get this reposted and pinned to my profile so
Oh
the
yeah,
algorithm likes it.
repost it if it. I'll do the same thing. Oh shit! It still says Founders Live. We're not Founders Live anymore. We're Business Builders.
Oh yeah.
I guess they
Founders
didn't change
Live,
that.
Business Builders.
Yeah. Well, for those of you watching, we had a Business Builders are slacking on not checking trademarks because this is a YOLO kind of activity. Ended up ended up in a bad place. So now we're Business Builders. So we'll fix that too. Update titles. There we go. Update all. All right. Should be in better shape. We'll see what happens. You want to do a live read of our ad, and then we will talk about the guests today, and then we'll go from there.
Yeah, I think you do you want to do the first read or do you want me to? And then I think you can talk about the first guest and I'll talk about the second one a little bit.
Cool. I will do the live read, and then we can do the guests.
Perfect.
All right. Well, today's stream is sponsored by OpenPhone, Chris. And OpenPhone is based around the idea that traditional phone systems were not built for modern business, and missed calls mean missed customers. So OpenPhone is actually the smarter alternative built to help you work anywhere, stay connected, and never miss an opportunity. You can run your business from one app on your phone or computer, and OpenPhone logs calls, creates summaries, and automates follow-ups. Its AI agent can answer calls, qualify leads, and route customers even after hours. 90,000 businesses have already switched, and plans start at $15 a month, and you could try it for free. So if you follow the call to action in this ad, you can get 20% off your first 6 months if you go to openphone.com/founders. That's openphone.com/founders. And if you have existing numbers, they will port them over to their service for free. And OpenPhone in the end means no missed calls and no missed customers. Try OpenPhone today.
I will. You know what the best part about being a sponsor on Business Builders is that we've changed the name of this live stream 9 times in the last 6 weeks. So nobody who sponsors this will ever have the right like promo code because we just keep changing the name. It's like
the attribution.
Enter Founders with Business Builders. It's good. But OpenPhone is awesome. We love working with them.
90,000 customers is pretty incredible.
I think it could be, we could get them to 100,000 by the end of the month. You know, let's get another 10,000 people who are listening to this. Well, 0 according to Restream, but we know that you're out there. Yeah, it's been a pretty wild ride for them because they were, let's see, OpenPhone founded
they joined here August 2017.
Okay. Yeah, so it was founded like right 7-8 years ago.
Yeah, it's one of those things where it's like, you know, we had the gentleman on about garbage and Reg last week about foundries. It's just like the phone is another one of those things. I think if you were to talk to a VC in 2018, they'd be like, the phone, there's no future in that.
Mm-hmm.
Who would talk on the phone?
Yep.
Turns out the rest of the world does. Just Silicon Valley does not.
Totally. Yep. And even now, I think even tech companies, every now and again, I'll check in on some tech company that I invested in, and they'll be like, you know what we figured out? We sell to insurance agents, and we can just cold call them, and they'll pick up their phones, and then we just pitch them. And I'm like, oh, this is amazing. You guys have discovered what 1996 was like.
All right. So live with Chris Bakke, and then guest number 1, I got to tag you on my post here. Alex Torelli. So he is a professional poker pro, and I've gotten to be Twitter friends with him. I've never met him, but it's one of those things where I've gotten to be friends with poker players who have shown up on the TV shows and live streams. And I'm like, oh, you play on those live streams. That's amazing. Which is the same thing I think you get sometimes when somebody's like, oh, Chris Bakke, you write funny tweets. Oh,
Yeah,
I read them all the time. So, you know, which is a weird thing when I've fanboyed with folks like Alec and some of the other kind of poker pros I've met, is they they kind of react the same way. They're kind of like, yeah, it's just people putting chips and playing a card game. So so
Yeah.
relax.
But yeah, I mean, it's like the level of fame is like it's definitely you're like a mini professional athlete in terms of like if you walk into a place where people know you. Like I remember probably 15 years ago seeing Phil Ivey from afar in a casino in Vegas, and everybody there was like losing their minds because it was like, oh, we're here to gamble, and that's like the gambler. I mean, he got more attention than like an A-list celebrity would have gotten walking through that casino. So yeah, it's pretty wild. And then second guest is David Phillips. David is my business accountant. So I've worked with David and the Fondo team for a long time. He has saved several of my companies and several of the companies that I've invested in from hellish tax and accounting and bookkeeping scenarios. And so he's built sort of a monster firm over the last few years. And so I thought it would be interesting to have somebody on who's taken an accounting practice from, I don't know if he wants to share the numbers, but from sort of like a small couple man operation to now something that's serving, I think, like many, many thousands of companies and has like headcount in the hundreds of people. So
you brought in an accountant as a guest?
Yeah. He would call himself a founder that happens to do accounting. You know, here's the thing. We got the legal side of it. Now we need the accounting side of it. So it's going to be good.
That should be hot, as they say.
Hot topic today. Yep.
Alec is here. Let me bring him in.
Let's do it.
Hi, guys.
Howdy. Hey, Alec.
Hey, I appreciate you guys having me. Big fan of the show, what you guys are doing, and it's awesome to be here. Thank you.
Thanks for coming on. It's nice to meet you, and thanks for being here.
Definitely.
Super fun. Well, I was telling Chris that, I know you because we've gotten to know each other over Twitter, and then now we've emailed back and forth, but I've never met you in person. This is the first time we're going to talk live. So I'm excited to do that. And it's one of the fun things about Twitter, right? You get to just get to know people a little bit until you get to know them. So I'm excited to chat with you today.
Yeah, definitely.
So in terms of your day to day, what do you do? Do you just play poker? Tell me about a typical day in the day of Alec Torelli.
That's a great question. And I guess I would paraphrase that with I sort of see myself in 3 buckets, and it depends on which current activity I'm focusing on. So let's start with poker, because that's kind of been most of my 20-year journey as a professional. So yeah, when I'm in poker mode, it's like everything else that I'll talk about later kind of gets put aside, and my whole day in life is engineered around poker. It very much is. I sort of treat it like a sport, kind of how an athlete would think about it. So even if you're not at the table playing, there's still something you're doing to get ready to put yourself in the best position to win in that moment. So it might be working out, or a meditation, or reviewing hands, or studying your opponents, or talking with colleagues and friends about strategies to win in the current game you're playing. And those things are a moving target. They're changing every single day and every single dynamic. So this summer, for example, I was at the World Series of Poker. I competed there for about 5 weeks. And the days are very long. So the tournaments sometimes start at 10 a.m. and they finish at midnight. And you have, 15 or 20 minute break every 2 hours, maybe with an hour dinner break. So you don't really have that much time. And then the time that you're not playing, you'll be doing the other things I said. You'll be, working out, or preparing, or strategizing, or writing down hands, talking about hands, thinking about hands. So it's very, very demanding when I'm in competition mode and playing poker. But at the same time, I like to be full-time committed part of the time, because I think that's the best balance for me. It's very hard to be. It's kind of like an athlete in a sport. There's off season and then there's season. And I sort of see my poker journey like that. It's very hard to be on and locked in and dialed in and have everything engineered to play poker all year long, because it's very, very taxing and draining to operate on that level. Poker is very unforgiving. In other sports, it's kind of like who makes the fewest mistakes wins. And in poker, it's somewhat like that. But the asymmetry is that any one hand could take you entirely out of the tournament. So you can play perfect for 10 hours, but if you make one mistake, you lose everything. And so that creates a high level of requirement to focus and have a certain level of intensity, and also some stress that comes with that. So it's very, very, very demanding, at least for me. And so I love to be all in when I'm in, but then I enjoy the times that I'm not playing poker. Like now, the past month after the WSOP, I'll be completely in a different gear, and my daily life will look totally different. I'll be focused on content and coaching and running my poker business and investments and putting together early stage deals and making investments and trades and that sort of thing. So it's very, very different. But that balance kind of helps me stay energized for both of the activities that I'm working on.
And what's happening on the investment side? Is that like SPVs or a fund or your own personal money, or how do you look at that?
The first two. So I do put together SPVs for early stage startups that I invest in and then consult for. And I really enjoy that space, mostly in the wellness space, because I think poker is kind of I see it like a wellness, like a mental performance activity. And so I'm really enjoying things in the wellness space. And then also in Web3, I do feel like I know a lot about that space and enjoy it a lot. And so those are kind of the areas I focus on for the early stage stuff. And then, yeah, I think investments, and I'm not like a day trader by any means, but I think there's a very interesting dynamic of the things that you learn in poker to think about risk reward and asymmetry and Sharpe ratios. Like they're very useful for making investments and trading. And so I sort of see it like they have the same root language, almost like Latin is sort of the root, but then you kind of learn different languages. And so I really see investments kind of a game very akin to poker, albeit with a higher ceiling. And so, yeah, I like making investments and trades and that sort of thing as well.
That's awesome. And you're focused on the poker side. Is it all live games, or is it online, or a mix, or what's your specialty?
Yeah, and this is a really interesting thing about the investing world too, that I'm sure your audience can relate to. It's like even within a seemingly very small niche like poker, there's niches within that. So you touched on a great question, and I know I'm sure it's like this for what you guys are doing as well. Like there's online poker, there's live poker, and then there's tournaments, and then there's cash games. And so each one of those four are different things. When I have clients come to me, sometimes they're all over the place, and they're like, "Oh, I want to learn live cash and online tournaments." And I tell them it's kind of like learning four different languages or four different instruments. Like, yes, the bass and the guitar are similar, but to be like exceptional at one, you're probably gonna have to give up the other. You're gonna have to have like a main driver. I've had different ones throughout my career, but it's been 20 years. So like sometimes I find excitement in moving back and forth because it keeps it fresh. And then like ironically learning certain things in a different format help you in the previous one. My main one was been live cash games. Recently, I've been playing more live tournaments. I do also play online. And one of the deals I've done recently, I'm an investor and ambassador for a site called Phenom Poker. It's really cool because it makes every player an owner. So like by playing on the site, you earn equity. It's Web3 based. So you earn tokens, which represent equity. And so it makes every single player an owner. And so it grows the pie and it shares the pie amongst everyone, which is a very unique model. And it's worked very well so far. And it's really cool to see, like it's a cooperative sort of online economy, which the online poker space has been ravaged with problems for a decade. And so, or more. And it's hopefully solving some of the problems in the space. So I do play online when I'm playing there to support the site. I do enjoy it a lot. But competitive wise, mainly live cash and live tournaments. Yeah. But you have to find, I guess the takeaway is that like, you could be really good at one and then not that great at another. And it's really hard to be good at everything. Like even in poker, it's hard to be good at all four of those. And it's also hard to play various different games. So if you're really good at Texas Hold'em, which is the only game that I'm like, I would say competitive at a high level, it's not inherent that you'll be good at Omaha or like a pot limit game or a mixed game. And so it's very, very like the riches are in the niches, the old adage. And so I think it's very much like that in poker. And I'm sure you guys have thoughts on that in your space as well.
Yeah, and I'm curious your take on it. Like, as you're seeing those different like components of the poker universe, like Vegas is obviously really struggling. Like visitor numbers are way down. People aren't going there, so that's a mecca for live. And then Southern California is a mecca for live cash games too,
For sure.
And then the online stuff is. Yeah, the online stuff is like super fragmented. Then you have a bunch of Web3 versions of it. it all seems just kind of muddled to me versus like back in the Chris Moneymaker days, like in the early 2000s. It was like, okay, everybody put their credit card into party poker and congratulations, you lost $1,000. So like that, I watched people do that and it put a lot of money into the system. And now it seems much more, I don't know, tumultuous and kind of muddled in terms of, so how are you kind of seeing the space and the ability to make money?
It's a lot more mature. I think that there was like people refer to it as sort of a gold rush phase of poker, and it was a game that um, it was very, very, very small before it blew up on. You mentioned the Moneymaker effect. That's what got me into poker. I was 16. I was watching Chris Moneymaker win on TV for the first time. It was on ESPN. Like poker became very cool at that time, and so everyone kind of was playing at the time. I mean, they had one of the best marketing campaigns in anything I've ever seen. Is anyone could win. I mean, that slogan is just so good. And they branded that, and it just captured the American consciousness, and so everybody wanted to play poker. So there was this massive influx in liquidity, and the game was still at its previous maturity, which is like there wasn't really a lot of strategy. There was no AI, there was no solvers, there were no computer modules and simulations. The game wasn't really figured out. And so that combination created this sort of boom and this gold rush of poker. There was also, as you mentioned, Michael, the ability to easily bridge between, live and fiat capital and playing online. There weren't all these rules and regulations around it. So it was completely the Wild West. And so this convergence, this cocktail created these conditions where there was a massive boom. Since then, poker has changed a lot. Regulation has changed, but also the average player has gotten a lot better. There's so much more knowledge about poker, and so it's so much more mature of a market. I will say there are still edges to be had, but it's a bit like trading and investing as well. Like the trading market with algorithmic trading and stuff has just changed the game entirely. And so I think the skill required to win today, like what to do to get ahead of the curve today, is very different, and you would approach poker very differently than you would in the past. But I do think that COVID, we saw like a boom in poker in the sense that you're locked down at home, and what do people do? They want social things to do, so they play online in these private clubs and these Zoom cash games. They play with friends, and they pick up a hobby that a lot of people came to me and like I saw in the general consciousness online in the poker space was like, hey, I've always wanted to play. Now I have time, or now I'm going to play online because I'm at home. And so that kind of stuck. And I think since COVID, and also with the rise of social media, there's been a lot more accessibility to poker, and like people are following other poker players. And so it's not necessarily relying on the incumbents or the mainstream or like the media to renew these rights with ESPN or whatever and showcase poker. Everyone could become their own mini media channel. And so we've seen the rise of poker vloggers, people that are creating content or educational content. I've been on YouTube since 2013. I started with a show called The Hand of the Day, where I would travel around to these various cash games and tournaments around the world, and I would like just take a camera and like just film, hey, I played this hand, here's 5 minutes and here's what I did and what I thought. And then so people would learn about poker, and then people would become interested and follow people, and they would kind of live vicariously through the travelers and the vloggers and see the events and get up close to it. So it created this excitement and the accessibility to it. It's a bit what you guys are doing in the investment space, like this world of like being able to acquire businesses and buy businesses. It's like it was completely foreign. It almost seemed like this impossible thing that only these small group of incredibly wealthy venture capitalists would do. And then now there's, thanks to you guys like raising awareness and education, it's becoming something that is more accessible to people through different mediums. So I see that in poker, and I'm seeing like a potential for boom and resurgence and a very big excitement in the space, like we haven't seen before, and it's definitely needed.
And how do you look at content in the space? Oh, sorry.
Nope. Go ahead, Chris.
All right. How do you look at content in the space? Because one of the things, and I don't think I've ever played outside of like roulette for fun in Vegas. Like I am very much not a poker player. I appreciate it. I think it's fascinating, and YouTube knows that, and so they will recommend these like Doug Polk and Brad Owen videos and stuff in my feed. And one of the things that is like a total outsider to the space I've always found interesting is like, you now have hundreds or thousands of hours of footage on some of these vloggers, maybe yourself included, of them like analyzing hands. Here's what I would have done in that situation. You mentioned sort of like, AI and using analysis to sort of get an edge on maybe other players. Like, I guess from your perspective of being a pro, but also being a content creator, like how much of that do you think about? Is there ever a concern that like, somebody's watching my videos. I've talked extensively like how I would play this certain hand. They're going to get a good read on me. Is it just always being like unpredictable? How do you think about that?
There's multi-facets to it for sure. I mean, in some ways, it's a double-edged sword. So being, in the public eye in poker, people can see what you're doing and observe your strategies. There's actually, I just got DM'd by, and I haven't looked into it, but I got DM'd by someone that basically aggregated all of the live stream data and then like sort of used AI to quantify people's betting frequencies. So like, hey, I've seen this person play, 100 live streams over the last 10 years, and these are their frequencies. And it's just getting insane, like what you're able to track on people. And poker is very unique because it's more a game of people played with cards than a game of cards played with people. So you're really playing the other player. And if you know someone's betting frequencies, it gives you you're kind of trying to exploit each individual player and like respond to them. So it is in a way you are like leaking information, both by myself being a coach and a content creator, but also just putting myself out there publicly by playing on the live stream. So if I play on the live stream and I don't talk about it, people can still observe my habits, my betting patterns, my frequencies. And so in some ways that is something you expose yourself to. In another way, this is what, every competitive athlete does. Like, they all play on television because that's where the ceiling is of their industry, right? This is like what it means to be competitive. You put yourself out there. And if you get deep in a tournament and the tournament's televised, you're going to make that appearance. So like in some ways, this is a good thing. In other ways, building a brand also helps you get on these televised streams. People want to see people they're familiar with, that they know, that they think are good, or that they think are interesting to watch. So there is like there's not only like asymmetry to the downside. The other side of it is, the vast majority of the people watching the content are not, competing against you necessarily, right? They're competing in different games. So the majority of the people that we serve and that I coach or that our training programs help are like people that are interested in poker that play part-time, and they come from they're working professionals or they're seniors. They have a lot of extra time on their hands and they like poker. So they're not necessarily competing directly against me in these, high stakes cash games in Macau or Vegas or whatever. The other thing is, if you do play a tournament, even if they sit in the same tournament with me, the World Series poker at the main event had 10,000 people. So even if, I've coached 100 of those people, let's just say like, an example, it's very unlikely that, we're going to play against each other. The last thing is that like poker is very much a very player specific and moment specific game. Like when you're playing at like a very competitive level, like you're not just taking a base strategy that you're implementing across every single node on the game tree against every player under every circumstance. It's much more nuanced than that. So it's much more like, hey, this is, these are the default strategies, or these are the general ways I approach a hand. But what are the, 5, 6, or 7 incredibly unique variables that exist only in this very unique moment of time in a vacuum that I'm going to take into account that are going to dramatically potentially alter my decision. So even if they see that, hey, Alec plays these hands this way, like if your opponent is losing and frustrated and that you've identified certain betting patterns about them, and you guys have history together because you had re-raised them 4 or 5 times and they had folded every time. And so like all of these things are also happening in real time that dramatically change the strategy and the nuance of the decision. And then you also have the reads on that individual player. Like, and you guys have seen this in negotiation or business deals. Like you go in with a general framework of like, this is how I want to approach this situation strategically. But I'm sure you guys, I would be guessing that it's like when you close like a business deal or you're acquiring a company, there's always there's a science to it, and there's some things you could teach, and then there's an art to it. And you could teach the art to some extent, but you need to know like when to deviate from the rules. You need to know the rules, but you need to know when to break the rules. And so I feel like a lot of times when you're playing, you're sort of dancing between these two lines. And so I think that is a thing that's a unique thing to keep in mind as well. But overall, I would say sorry, 2 seconds. The last thing is like the upside of being creating content and sharing your journey is like way outweighs the downside. Because like overall, like it's been a massively net sum positive experience for me. I'm doing something like this because I've created a brand in poker. Like there's just so many things like this that are huge wins. Anyway, go ahead.
Oh, I was, back in my day when I would actually play poker, I played 10 cent, 25 cent. That shows you how good or bad I am. But
nice. Well, that's when you could buy a house for $8,000. That was,
yeah, back then.
What was this, 1940s, 1950s?
Yeah.
So
it was basically $50 plus a bag of Doritos. You could get a 4-bedroom. Yeah, in San Antonio. But one of the things as I would read the books and look into the math and everything that was so interesting was, the impact of variance on people's outcomes. And there would be these swings where people would just lose money for 2 years, even though you were making the right decisions. Just happened you were losing every 60-40 that mattered, in those
Right.
2 years. And as I watched the pattern of folks like yourself, what looks like Daniel Negreanu, Doug Polk, and even some of the guys they would talk about in like High Stakes Poker, back when that TV show, I used to love watching that TV show with
Great.
those guys.
Awesome.
But like there was kind of two buckets. You had number one was like the degenerate gamblers who were like just all in gambling all the time. And
Right.
they seemed to at least once in their career go broke and owe everyone money. And then there was the people at the other end of the spectrum, which the folks who basically leveraged poker to create more stable, less variance income streams out of that. You're seeing like Doug Polk bought the poker room here in San Antonio with his partners.
Right.
And then you're doing YouTube and coaching and all this kind of stuff. Like, why do some people see the light like you have, I think, to go down this path of understanding you have to diversify out of poker, and then some people just go down the degenerate gambler like level? How do you think about that segmentation, or as an outsider do I have it wrong?
No, I mean, there's also another this kind of exists on a spectrum the way I see it. That's a good observation. And I think there's also a middle ground of people that like just want to play poker because they like just love the game and that's what they want to compete at, but they do it in a way that is sustainable, and they treat poker like a business. And in fact, one of the things that I'm very big proponent on is like, you can be very good at playing poker or you can be a good poker player. And so being good at playing poker is all the tactical strategy, sort of like the artwork on the wall, but you need a very solid foundation. So how do you manage your money? How do you manage your yourself, your ego, your emotions, your discipline, your focus, like when to play, when not to play? Like these are all things about like self-mastery and managing yourself and being a good poker player. And I think both of those skills are crucial. In the past, we saw a very unique image of poker that was kind of like the sort of maybe more degenerate image of like smoking a cigar, drinking alcohol, a big back smoke-filled room, and that's kind of like the legacy image. I think, as we mentioned, poker was a very immature market at the time, and so over time we've seen poker become very competitive, more like a mental performance sport where you see people that are into meditation. There's a huge, one of the most successful poker players the past decade, launched a hypnosis, like a self-hypnosis app to like do mindfulness training, to do like working with an elite mental coach for peak performance, to be like locked in when he's playing. This is one of the best poker players in the world launched this app. And so you're seeing Martin Jacobson, when he won the main event, he basically like there used to be a period of time where between the final table of the main event and when the main event aired, it was like 3 months. So he basically locked himself in a room with his friends and he played out the final table based on the chip stacks of all the players. And he played out like hundreds of simulations. He went in the lab, he grinded online. He was totally just, in immaculate shape. You would have thought he was an athlete. He's just incredible shape, mentally, physically, like just got himself in this dialed in mode of performance to compete at the highest levels. You see people like Jason Kuhn that are college runners, athletes that take that athleticism and they bring all of that intensity and training and focus and discipline, and they bring that not just on a physical realm, but also like from a mindset approach and a work ethic approach to the highest levels of poker. So I think we've seen this like radical shift from one end of the spectrum, and I really think we're maybe it hasn't gotten there in the public consciousness, but like at the highest levels, when you're seeing what the people are actually doing, like it's much more towards the other side of the spectrum. You mentioned something interesting too, which is like the diversification element of poker. One of the things that attracts people to poker, I mean, a lot of things attract people to poker, but like one of them you mentioned is there is an element of risk taking, and it does select for people that have a very, very high risk tolerance, and that is a very fine line. I would not consider myself a gambler at all. Like it genuinely doesn't interest me at all. No like moral judgment of that, but like I've never really played a table game. I've never made a sports bet. I don't say never. I made like 2 or 3 sports bets with friends, but I've never like risked money on like sports or table games, roulette, blackjack. Just none of that stuff interests me. But I do have a high tolerance for risk. So like it takes a very fine line of where that is, but it does attract people that have maybe too high a tolerance for risk and not enough discipline and not enough bankroll management, because there is that element of risk taking in poker. And the other thing that attracts people is like poker is a game where you're drawn to it in a lot of ways because you can create whatever life you want. You can like work when you want, you can play when you want, you can play where you want, you don't have a boss, you can play all night. And so it does attract people that are like very much want to do things their own way. And not all of those people want to be involved in the business world, which is, you know, you have a Calendly invite and you have to be somewhere at a certain time and you have to be show up and you have like responsibility. You have to manage other people. You have to be very, very organized in a lot of different ways. And so like these things are not necessarily mutually exclusive, but there's not necessarily a big overlap between the people that are drawn to poker that also have that perfect, like a reasonably fine line of risk taking, but disciplined, that also want to traverse over into the business world. So it's like where three circles overlap, there's not that big of a space. And so people that are in there are I think few and far between in the poker world. But I think the people that are doing really interesting things. Jason Les, for example, used to compete at the highest levels in poker, traveled the world, played like all the big events. He now runs Riot, which is the biggest Bitcoin mining company in North America, might be in the world. They're out of Texas as well. So like the people that find that middle space, they like take that poker talent and they could apply it to a lot of other areas, because I think poker is really good at teaching how to think like from frameworks and decision making. And it really helps to think about risk management, decision making, a lot of things that I think are very helpful in the business world as well. So it's interesting.
Yeah, and I guess it's also a weird pull on somebody in your shoes who's, you know, kind of, you know, at least trying to figure out the three concentric circles to be in the middle. Yeah. Because one of those circles requires you to play good poker and win at poker. You would just by game theory be happy to have somebody show up that's a degenerate gambler and maybe not like making good decisions. So do you feel like you can recognize those people when they're like, when you see them and you're kind of segmenting and sizing people up? Do you recognize kind of the people that seem to have their act together versus the ones that are maybe not looking at the whole thing the right way, as poker being part of life rather than life being poker?
Yeah, and you know, as trite as it is, you do have to judge a book by its cover, right? Like you sit down at a table with people you've never seen before, and everyone has a big incentive to conceal emotions and their intentions, because it is a game of incomplete information where you still have to make bets. So like nobody's trying to telegraph, hey, I don't care about it all the money, I'm just going to gamble every hand, because like that would inhibit their strategy to a large degree. So like you have to get very good at like assessing these things. You don't always get it right. But you do directionally notice patterns over time. And you also notice, what I think is more interesting is you notice like everyone acts a certain way when they're winning in life. It's like pretty easy to be at your best, let's say, and to be happy and positive and, you know, kind and everything when you're winning, when everything is going your way in life. But when you're losing, it's very hard to act that way, especially when people are used to winning, because they come from, you know, the business world where they win all the time. They have positive reinforcement. People tell them they're great all the time. Not always that way, but sometimes. But then in poker, it's very humbling. Like you can be the best, or you can be the person that wins all the time and just get absolutely crushed, even if you deserve to win or you're the best player. So you get to see people at their best and their worst, and so you get to see the whole spectrum. Like, so each game is like, you know, an entire roller coaster. So you get to see the ups and the downs. So what's much more interesting to me is not just to see where people start, because it's pretty easy to start at a even keel. When you sit down at the game, you're kind of typically in a decent mood. The game is just starting. You're excited. You're optimistic about the future. But at 3 or 4 or 5 in the morning, or 12 hours or 20 hours into a session, if someone is, you know, one standard deviation or two standard, you know, away from what their normal swings are, you get to really see how their mood is changing. And so the key in poker is to be aware of what level that person is on right now in this moment, and how they're likely to behave in the future, how you anticipate their behavior before they even do it. Because if you're really observant, you're really present, you're really focused, and you notice patterns, well, you can see the moment where they might lose their focus, and that they've gone from completely rational and like protecting their chips and strategic and focus and logical to emotional. And you can see the moment where they're going from, hey, now I want to gamble. And so you can see like a completely different person within the same identity just completely change their behavior in the span of a session. And your job is to kind of be aware of when that's happening. So I would say it's almost like, I mean, it's very hard for a person to have like a very default mode that they always operate, because that requires an immense amount of emotional mastery to be able to play well, to make really good decisions when you're tired, or in the face of adversity, or when you're losing, or when things aren't going your way, and to feel that immediate emotional feedback and not be jolted by that, or not alter your decision-making capacity because of that, requires like a very solid level of mastery. And so not that many people have that. And so you get to see and experience the whole gambit and try and identify when people are changing their intentions, and then, make exploitative plays to take advantage of that. And that's a really fun aspect of live poker. That's why I love live poker so much, because online you don't really have that, right? People are hiding behind the screen in anonymity, and you can't tell what they're thinking and what they're doing. You can't see them. You can't see their reaction when they win and lose a hand, or their intention when they're betting, or if the way they throw chips in the pot, if they start to care less about the money, because like the way they're acting about their money, and so it's a very unique aspect to live poker, which I think is what makes it one of the greatest games.
How much? I mean, obviously there's different, you have these varied sizing events from, 10 cent, 25 cent, 1, 2, all the way up to, I don't know what people play, 100,000,
Right.
300,000, whatever.
Sure.
Like I've always found it interesting that, like, as you mentioned, you have some of the most powerful and therefore wealthiest people, like at the tops of their industries, who get into, occasional live games.
Yeah.
I'm a big like Andy Beal fan, and I think it's fascinating that you could have somebody who's worth 10 or 15 billion dollars sitting down at the same table with maybe somebody who's worth $1 million, and they're both very successful, and they're both playing like a relatively high stakes game. But like Andy Beal just doesn't care about losing 100 grand or 250 grand, but the guy with $1 million cares deeply about that. Like that emotional aspect of coming into a game where you probably know that some people just care a lot more about the money than others. I guess how do you think about that? And like any advice to, people who are like early in their poker journey, thinking about sort of like risk tolerance relative to like, how much you can actually afford to lose versus the other players?
Yeah, that's a great question. And the Andy Beal story is great. It was in a book called The Professor, Banker, and Suicide King by Michael Craig. He's a friend of mine. It's a great book. One of the things I read early on in poker. And there is a concept called martingale, which basically means like if you have more money than someone, you martingale them, which is like a term and to say you increase the stakes until you eventually just win. So if you lose for 1,000, let's say we flip a coin for $1,000, and you win, and then you say, okay, let's do it for 2,000. Okay, sorry, I win, and then you say, let's do it for 4,000, and then I win, and then 8,000. Like if you could keep flipping that coin, eventually, you'll win. So like people that have when there's like the delta between a bankroll between one person and another, a common tactic is to increase the size of the game. And so, the principle is martingale works until it doesn't. Like there will be a distribution where like, the person that has an edge, or that they just eventually win. So this is like a common tactic. And it is an edge. So like one way to compensate is to care less about the money, because you can make plays that other people can't make. This is also a true dynamic of tournament poker, where even if everyone buys in the same amount, if I've accumulated 4 times as many chips as you, well, I can bust you from the tournament, but you can't bust me. So if we go all in, you could only win 25% of my chips, but I could knock you out. So there's an asymmetry there between the hands I can play and the hands you can play. So this is true in a microcosm of tournament poker, but it's also true in cash games. If we sit down when we played the high stakes cash games in Macau, the pros were the best players, but the least wealthy, right? The wealthy businessmen that were playing there were like, they can just always double the game. They could always play bigger. And then they can also make bluffs that you can't afford to make. So even if you think they might be bluffing and they might be playing a crazy hand or a stupid hand, like, yeah, you might have an intuition that, hey, like technically here, if I was just, scoring, A, B on a test, I would guess they're bluffing. But do you want to risk all of your money that you worked all night for, that is significant? You're taking a shot in a game. This is a big game for you. It's a small game for them. Do you want to risk all of that money on this one hand? And if you're wrong, they bust you, you're out of the game, right? Or like, you lose a lot more than they care about. So this is definitely a tactic. Bankroll management, a lot of pros will say that bankroll management is one of the most important things in poker. Like you can be the best player in the world. If you don't manage your capital correctly, you will be broke. I think this is also very interesting in trading and business as well. Like, you could have the right thesis, but if you bet all your money on one trade and your thesis is wrong, you will lose. And so like poker is like a probabilistic game. Like the best players are going to win often, but they're not going to win all the time. So it's all about assessing the amount you can risk such that you stay in the game. So it's much more important. It's not maximizing your edge in any one game is not as important as staying in all the games long enough so that your edge manifests over time. So that's something that most people learn the hard way. I definitely did. I was playing in games too big for myself, and round trip to $1 million before I was 21. When I was 21. So you think easy to think you're like high on the world, or like, oh, I could always win or whatever. The reality is that, capital management is very important. So there's also the sense of like, as you build more capital, money has diminishing marginal utility. Like preserving your capital that you have is more important than building additional capital. So you tend to get you seem to get more risk adverse as you progress up the limits, because like, let's say you're playing a game with a $1,000 buy-in and you move down to a game with a $500 buy-in, or you move down to the smallest game with a $300 buy-in. It's challenging, but it's not detrimental. But to move from the biggest game, like you said, 100,000, like hypothetically $100,000 buy-in back to $1,000 buy-in, it's like, ciao, it's over. You go do a different, quit the profession, you quit the game, you abort the mission. So, so there's different stages of it, and there's different like levels of risk tolerance. And I think you see this in the business world too. Like people that are, young and starting out, they're willing to, take on debt, start a business, and go all in. And as people get, certain levels of net worth, they're more like, oh, I want bonds, I want a more defensive portfolio, I want to cruise, I want to float up. And like, so you see this shift in psychology amongst people as well, not just poker, but in the business world too. But I think diversification, as Michael mentioned before, is a great game to have to play, because like that stress of having to win is very challenging. So I think that's another thing to consider with bankroll management as well. Like I always encourage clients to treat poker like a business. A lot of them, like I mentioned, come from the business world. And so like when you have a business, you have an LLC and you have money in that LLC, but that's not all the money that you ever have. You have like a siloed business that's like independent risk, and it's set for that. So it's the same thing in poker. Like you have a poker bankroll and you have a life bankroll. And so like you don't co-mix those two things. You treat the poker bankroll like a business. You have your own LLC, checking account, credit card, accounting, all for poker. And hey, if this business goes bust, like hopefully it never does if you manage your money correctly, et cetera. But like you still have, that's just one LLC, right? And so that's kind of the way I think about it.
Under a bridge somewhere.
Right, exactly. Yeah. So that's really, really important.
What are the we've touched on a few of them, but I guess like what gets you excited about the sport or the game? Like you've mentioned, obviously a lot of this is shifting to online. There's like pretty interesting Web3 opportunities around getting ownership. There's probably like staking of different players that sort of move to online. Obviously, all big platforms, the content creation aspect, but you mentioned some like interesting niches around like meditation and money management and stuff, like from an application layer perspective. Are there things that you're investing in or that you are excited about, or that like if founders are sort of building in this space that you'd love to see more innovation in XYZ areas?
Great question. Thanks for that. The things that really excite me today are one on a personal level and two on an industry level. On a personal level, like the reason I love competing at poker is because there's always another level. Like you said, the mindfulness, the meditation, like there's always another level that you can go to in terms of your own self-awareness, your own ability, your own level of self-mastery, your own ability to make good decisions under pressure, think under clarity, not let ego get involved, quit a game when you're outmatched. Those are very hard things to do, especially when you're losing, like to kind of separate yourself from the situation and make a good decision under pressure. I find that it's like an eternal game. It's like what Simon Sinek talks about. It's the infinite game. You never beat poker. You can either play the game or stop playing. And so like when you're playing the game and you're competing at a very high level, it really challenges me. I think like I have to be the best version of myself to win, and I could always be a little bit better. There's always something I could do better. I could study more and whatever. So like I like the personal challenge of trying to see what I'm capable of and compete. And there's like a real energy about that is awesome. And it also, I'm really grateful that poker doesn't have a shelf life like soccer. I'd be retired. I'm 38, but I feel like poker, it's almost one of those things where I still have enough energy and youth and vitality, and I'm in good shape, and I have to take care of myself physically, to exercise and work out and do all these things to maintain that as long as possible. But then I also have the maturity and the experience. So it's almost like in a weird way, you get a little bit better over time. I'm sure there'll be a tipping point. I'll peak at a certain age, but and then I'll decline because I'll have less energy and whatever. But so that's really interesting. On the other side of poker, I really like you mentioned, what's happening in the Web3 space. I think what's exciting about Phenom is it makes every player an owner. And so it's really cool that you earn equity by referring other people or playing on the site. But I think what's more, it's very cool in a vacuum, this model specifically to improve the landscape of online poker. But what I'm really excited about is just the general model in the future of like distributed ownership of equity amongst things that people contribute value to. So the customers and the players are all benefiting from playing on Phenom Poker. And I think that distributed equity ownership model is really going to help everyone get a piece of the pie. And as you guys know, like you need to own assets or productive things or own equity it's one of the best ways to build wealth over time, to own productive things. And so most people aren't able to do that. There's like a huge gatekeeping to do that. You have to be an accredited investor. You have to have wealth. You have to know people. It's like, it's very hard. And I think I'm excited for a world in the future where everyone owns a share or a piece or equity in the things that they use and consume and contribute value to at scale all the time. So I see a world where that's like very common, where there's millions of essentially publicly traded companies, like maybe billions. I think that's going to make a much more equitable world. And I think Phenom is like leading with an example of this and how it's working. And so I'm excited to like where that moves the arc of this future world that I hope to live in. The last thing I like about poker is that I think it's, my sort of mission, what I'm trying to do at alectrelli.com, like I'm trying to like share my own lessons, is not just help people be better at poker. I do that through my training site, like, Conscious Poker. Like I help people win more at poker, which is cool. But I think the long tail and thing that really excites me are what I'm seeing some of the other people that have, evolved out of poker that are doing in like the decision-making space, and trying to go into taking like lessons and frameworks and things they learn in poker and apply those things to other facets of decision-making, investing, and life in general. So I think poker teaches people a lot of good frameworks to think through decision-making and ways to think about things like money management or risk. And I think that really can help people make better decisions in general. So I'm really like excited to distill a lot of these lessons I've learned and hopefully share them. And that's something I'm really passionate about as well. So I think poker's like a great game to learn, because you do learn a lot of things that will help outside of poker if you master those things. I wrote a piece called, Why Poker's the Greatest Game. I'll be sharing it shortly. So yeah, I think it's just a great game to learn, because I think it could teach you a lot of things that are really valuable skill sets in life and business as well. So that's kind of like my personal mission that I'm really excited about.
Totally. And if people want to follow your content or work with you, you mentioned the site alectrelli.com. I guess what's the best way? Twitter,
sure.
YouTube, blog, like what's the best way to find you and get in touch?
Yeah, so Alec Trelli is kind of where I share lessons from poker that apply to decision making and risk. Conscious Poker is like specifically a poker training site. So if you actually want to win at the game, Conscious Poker is my training site. I'm very if you're interested in Phenom, you can visit joinphenom.com, use the code ALEC. There's like deposit bonus for anyone that plays on there. Yeah, like I'm also happy to like chat with anyone. Like I'm very friendly. I'm also in New York City now, so if someone's here, reach out. I'm very like, read all my DMs on Twitter or Instagram. Yeah, my YouTube Conscious Poker YouTube has like, I don't know, 500 videos on poker strategy. So that's like something that if people want just free content, it's there. Yeah, we're redoing the site too at Conscious Poker as well, which I'm excited about. So a lot of good stuff coming. But yeah, reach out to me anytime. Like I'm happy to chat with people. I love interacting with people. I'm probably talking to like 4 or 5 people I've never met on Twitter DM or whatever DMs on a daily basis, Telegram. So I enjoy it. I'm like happy to chat with anyone, point them in the right direction for anything. Yeah.
Sweet. Well, thanks for being here. I know we're at time, but it was great to meet you.
Yeah. Stay in touch. Keep up the good work, guys. Really appreciate what you're doing.
All right. Thanks, Alec.
Thanks, Alec.
See you guys.
Man, I don't know that I have the temperament to be a professional poker player.
Now I was in coming into that, and now I just one thing that is interesting. We didn't have time to get into it, but I know a couple people who played who like dropped out of college, kind of did what Alec did, played professionally. Actually won a little bit of money, but just like felt like, it wasn't sustainable, or I don't want to do this forever. They're universally some of the smartest people that I know. Like once you go from being able to actually like figure out what your edge is and like how to manage bankroll and how to, tolerate risk and do risk management. And then you go apply that to like a marketing agency or a real estate practice, or something like that. You become like top 5% of your field very, very quickly. So,
it's one of those crazy things, right? School teaches you to think in absolutes, right? You either answer the teacher's question right, you either are wrong, you either get the answer right or wrong, you're either popular or you're not. The whole system is designed to think in a binary like type of outcome, right? Which is perfect if you're going to work in a Toyota plant. It's not great if you're working in a world of probabilities, which executive leadership is entirely that, right? And poker to some extent, I think, is a great game to teach people that lesson. Like you're only going to be right 80% of the time. Just better hope that 80% is perfect for you.
Yep. 100%. Yep. Yeah, it's a fascinating world. I love watching the hands. Like, it's one of those things. It's kind of like golf to me. I don't play
Yeah.
golf, but I don't mind watching it. All the like the rise of the individual content creators and all of these like spaces is so good for these sports and for these games.
Yeah.
But yeah, to your point, it is crazy that you, at least from everything that I've heard, I haven't been in years, but you have this massive rise of content creators that are making poker look cooler than ever, and Vegas as a destination is declining because like anybody can just pick up their phone and play a game whenever they want for whatever stakes, and you don't have to park and you don't have to pay $600 a night for a hotel room. So it'll be interesting to see over the next few decades what happens to Vegas, because they have not, if Top Golf was trying to get like ahead of the curve of where golf was going and missed,
Yeah.
it feels like Vegas has really done not much of anything to sort of capture people's attention.
Well, the immense power of Vegas is that it is immensely tied to the almighty dollar, right? And you're seeing that in how they're shifting a lot of the amenities out there, like the old days of the Siegfried and Roy, like manufactured show, and the casinos that feel like you're, eating inside of a factory and very manicured, the Disney-esque kind of approach to that. That's going away. And for young people to want to go there, they want to see more authentic experiences that don't appear to be fake and false. So you're seeing them bring in a lot more activities around that. So the conventional kind of old school Vegas is dying because they want to chase the dollars. At the same time, Vegas is totally like bifurcating. Like, you're seeing people go after the younger audience to try to get them there. The older people have the money, and if you walk around, it is all boomers dropping $600 a night at hotels. Like, that's who's there, and they're paying big money and they're going to fancy dinners. That's totally the case of what's going on. But attendance is way down. And then last factoid I'll give for you, believe it or not, I spent a lot of time reading about what's going on in Vegas. Last factoid is, if you actually look at the average age of people going to Vegas, it's going down, which is counterintuitive because young people don't want to go there anymore. But you know who's saving it? Immigrant families. Immigrant families love freaking going to Vegas now. And if you go walk around,
yeah, why not?
well, you'll see it's just like this. Immigrant families are the ones having kids. They're keeping our birth rate up, and you'll see them like it's a family from, pick a country, right? It's like an Indian family walking around, Indian American family, and they'll have 5 kids in tows, 2 in strollers, and they're just like doing the Vegas thing. And so the average age is going down because the people are bringing their kids, but they're immigrant families often from Southern California. Best I can tell, they drove in for the weekend. So
that is fascinating. I need to go again. It's been maybe 5 years, 10 years almost since I've been. I used to go a lot as a kid, though. It was like a tradition. My grandparents loved going, so we'd all go.
Yeah. The I went out in May to go to the Grateful Dead shows, or the Dead and Company shows at the Sphere, which, by the way, you got to go at least once in your life to go to the Sphere. And like, I just saw this firsthand. I was like walking around. I was like, oh, this is all the stats. This is exactly what's going on.
I liked all the tweets, whatever it was, a couple of years ago when the Sphere opened, about the cost to advertise and how they like spent, hundreds of millions of dollars building this thing, or $1 billion or whatever. But it's like, we're going to get it back in like 4 years just on advertising on the outside of this, if everything goes well. I don't know if that's true, but yeah.
So my second most popular YouTube video is about why the Sphere is losing money. And the problem is there's a mismatch between the cost to operate the Sphere and the types of like basically acts they could get to play there. So like Dead and Company, Backstreet Boys, they'll do well, but there's only so many of those, and they can basically go to the Sphere and demand like the split that they want. So the Sphere had, up until now, has not really figured out how to fill all their dark days. Like a typical venue, like a convention center, can fill with other stuff, or you can have events or whatever. So these guys have not, like, they hadn't figured that out until recently. They hadn't figured that out. They figured it out with the Wizard of Oz movie.
Oh, interesting.
Have you seen this?
No.
It's been a massive hit. They're showing an immersive Wizard of Oz to basically 10,000 people at a time inside of the inside of the sphere. So it costs them very little to show the movie. There's no talent, no production, handful of folks, unlike a big show where you're trying to squeeze 17,000 people in with security and visuals and all that kind of stuff. But they look to be like they're turning the sphere around because of this Wizard of Oz immersive experience. And they do crazy stuff. Like they have, like, during the tornado scene, like they blow a bunch of cold air at you and there's smoke. And then supposedly during the scene where like Dorothy walks through the forest with the yellow brick road, apples drop from the ceiling. They have little foam apples drop from the ceiling, and they only drop like a couple thousand each show, even though there's thousands of people there. So these apples have become like a collector's item, and people resell them for like $50 on eBay.
That's amazing.
Yeah,
that's actually very, very smart. Yeah, so that they're just going to be like creating custom content around the sphere now for these like immersive experiences, basically.
Yeah. And then like they could do 3 Wizard of Oz shows on a Sunday. Like I was reading, there's a guy on Twitter, by the way, just so you know, you can always find it on Twitter. There's a guy that all he does is talk about the sphere. That's his whole thing. He talks about the economics of the sphere. That's his entire Twitter presence. He's like a Stanford professor. That's all he does. And I was like reading this. I was like, oh, I need to make another video about this sphere.
That's good for research. Yeah, if you need to go deep on something, there's always some, mildly autistic person on Twitter who's dedicated their entire existence to the thing. So, well, we've got David in here. We can let him in shortly.
Should we do that? Should we do another ad read first?
Yeah, but before we let David in, I wanted to tell you about a company that I'm pretty excited about, Michael.
Oh, yeah?
You want to hear about them?
Yes.
So there's this company called OpenPhone. You're probably unfamiliar with them. That's okay. Here's the deal. Traditional phone systems weren't built for modern business, and missed calls mean missed customers. OpenPhone is a smarter alternative, built to help you work anywhere, stay connected, and never miss an opportunity. So the deal is that you can actually run your business from one app on your phone or computer, and OpenPhone will log the calls, create summaries, and automate follow-ups. Its AI agent can answer calls, qualify leads, and route customers even after hours. I'm going to give you one guess as to how many businesses have already switched to OpenPhone. How many do you think? 10, 20? Maybe 30 businesses have switched?
No, maybe 100. Has 100?
100. That's a great guess. You're close. It's actually 90,000 businesses have already switched. Yeah, 90,000. I know. Get out of town. And if you have $20 in your pocket, you can keep 5 because plans only start at $15 a month, and you can try it for free. So you get 20% off your first 6 months at openphone.com/founders. That's openphone.com/founders. And if you have existing numbers, they'll port them over totally for free. OpenPhone, no missed calls, no missed customers. Boom. All right.
I think you did better than me today.
We'll see.
Now
I'm going to do an ad read for Fondo as we let David in. He's going to get a free ad read too. Fondo.
I love it.
The IRS harassing you? Call David. David, welcome in.
I love it. Thank you, Chris.
Yes. David, this is Michael. Michael, David.
Pleasure to meet you, Michael.
Absolutely.
All right. So here's the summary that I gave Girdley, and then you can correct the record. I said David is the founder of a company called Fondo, and he's built a very interesting business around some boring things like tax credits and accounting and bookkeeping, but he's made them fun and exciting for businesses. My last company used Fondo. They helped us in a bind on some bullshit Delaware tax that David and team quickly got us out of. So I've been friends with David ever since. We've invested in some deals together. And then alongside of that, David is also a pretty prolific angel investor. I don't know how many investments you've done, but it has to be like hundreds by now. And there's some crazy winners in there that you can talk about. Is this all accurate?
Thank you, Chris. That's very kind. Yeah. So I lost my screen. Yeah, that's what I'm doing. I'm working on Fondo, and yeah, very happy that we helped Chris. I think save like 60 grand on that crazy Delaware.
I think it was like $83,000 on our Delaware franchise tax bill.
Yeah, that bill that Delaware sends every founder every year. Yeah, so we sort of built a platform around helping founders, get all this accounting stuff, bookkeeping, taxes, tax credits off their plates. And so yeah, I've been doing that for about 5 years. We have about 1,500 customers, and yeah, that's been quite the journey. And yeah, also love the startup ecosystem. Love working with founders. Love working with Chris. And yeah, I've invested in over 100 companies now.
That's awesome. What are some of the winners on the angel side thus far? I mean, they're all winners, but who's leading the pack right now?
I mean, I think the most obvious one for me is Rippling. Got really lucky to get into Rippling back at their demo day back in 2017.
That's amazing.
Yeah.
So do you guys just focus on startups, VC backed only, or how do you think about your niche as a business?
Yeah, so we're very specifically focused on Delaware C corps, which tend to be venture-backed companies. There's also a lot of bootstrap software companies that we support, but the common thread is Delaware C corp.
And is that is it eventually going to be Nevada, Texas, like other C corps? And is this trend real? Like you hear about like, oh, because Elon moved out of Delaware. Delaware, I think, is still the best place for most tech companies to start. But like, do you agree with that, or is that sort of what you guys are seeing?
We basically do business wherever Elon tells us.
Yeah.
No, I'm kidding. I think it is. It's definitely like a pretty charged discussion, I would say. But I think in practice, we still haven't seen a huge shift of venture-backed companies incorporating anywhere other than Delaware, especially U.S.-based companies. For a long time, even international companies raising money in the U.S. would incorporate as a Delaware C corp. So that's still pretty much the standard. And yeah, the reason we do that is because we want to be very specialized and very like helpful to our customers. And so we're deep specialists in the Delaware C corp game.
Yep. How did you get into this business? I don't even really remember the story, but I think like you've been a founder several times. Your previous company was acquired. Like, how did you end up building this, business that now helps like hundreds of, now 1,500, I think you said, companies? Like, what was the starting point?
Well, I love accounting, believe it or not. And
you're a sick man. Yeah.
Yeah, very twisted.
Your nose is growing, dude.
Yeah, believe it or not, I do love accounting. I mean, I studied it in college. Also started my first company in college, and worked at Deloitte for my first job, which is like the world's largest accounting company. But that first job, I was always moonlighting, learning how to code, and trying to build a startup. And so, I didn't last very long at Deloitte. I won a hackathon, and then stopped showing up to work and started building startups. And so, Fondo is my third company. At all my previous companies, because of my accounting background, I was like the founder that was like managing the finances, finding the accountant on Yelp or Craigslist, managing the QuickBooks, attempting to manually file taxes as well. It's just even though I liked it, it was kind of a big distraction. Actually, my first co-founder fired me at my first company, probably because I was spending too much time on this stuff and wasn't really adding any value. So I happen to like it, but it is a huge waste of time if it's not, the core part of the business. And so we really wanted to build a platform that like really allows founders to like set it and forget it and make sure that they're getting their financial reporting when they need it, whether it's for like a 409A valuation or quarterly investor reporting, or for their taxes every year, and then also do the taxes for them. And so we built a platform that kind of automates a lot of the work for the founders that we support, but also gives them the option to book a call with a CPA and get that support when they're in like due diligence, getting acquired by X, like you were, Chris, and kind of get the automation where you want it, and then like the white glove support when you need it.
So in the background, your firm is kind of a software enabled service, is kind of the way I should think about it. Like you've built some stuff to make it so you guys can scale your delivery model in a way that a typical small accounting firm can't.
Yeah, I mean, it's a very different experience. So like typical, we replace an accounting firm for a startup. A typical onboarding experience with an accounting firm might look like, a couple email exchanges back and forth, sending bank statements every month, adding people as a user here and there. And what I found, with my previous solutions going through that, is just that still is a time suck, every month having to send those statements, every month answering questions. And so we really designed like a lot of our integrations around like set it and forget it. So when you sign up for Fondo, you connect all your financial systems to our platform, and then our accountants never need to ask you to send them a financial statement, and really minimize that back and forth so that you can really set it and forget it. And so, yeah, so we built software that streamlines the onboarding, like kind of ingests all the data, and using AI to kind of automate certain things around the first pass of things, the first pass of categorizing your transactions, the first pass of drafting your tax returns. And so we've built like this platform with some AI agents that really, from the back end for us, streamlines the way that we deliver the work so that we can do it faster and more accurately, and at a bigger scale.
And staff-wise, you're like a fully remote company, or how do you guys? What's your philosophy on
We're
team building?
Yeah, so we are fully remote. We started in 2020, right in the middle of COVID. So we've been remote since the start. We do have an office in San Francisco and an office in Austin, Texas. And so we have like 10 or so team members in each of those locations, and everyone else is distributed. And we get together, a lot of us get together multiple times a year to just do things in real life.
And how does your like number of employees per client compare to, say, your standard small accounting firm? Like they typically will have 1 to 3 people, and you have X number of. Yeah, like how does that work? Like how much more efficient are you?
Well, so if you look at the sort of like customer per accountant across the industry, like Deloitte, for example, well, revenue per accountant, like Deloitte is at like $140,000 in revenue per accountant. And they're, a typical accounting firm might have, 20 customers per accountant. And I think today we're closer to maybe 50 customers per accountant. But we, that's definitely a metric we look at. I think investors really like that metric. For us, we really want to maintain really quick response times to our customers. So our customer response time is less than 7 hours to get them to an answer, versus sort of, typical experience with a CPA firm. You might get ghosted for a few weeks or a few months if it's the middle of tax season. So we really prioritize getting back to our customers quickly with an answer and a solution. And so, we definitely, from an operational standpoint and like scalability, we look at that metric, but we really look at, NPS and like customer response times. But, that's our job to figure out as a business. How do we make it more scalable? And, ultimately there is you guys are in the game. I mean, like AI is changing everything. It's enabling every company to do more with less. And so I think definitely in this industry, you'll definitely see, much smaller teams helping many more companies.
Yeah. Is there? Go ahead, Chris. Sorry, I could have kept going nerding out about accounting, and you said accounting wouldn't be interesting, Chris. Look at all these questions.
No. I said this is going to be great. What's the what do like I guess because you worked at the biggest or one of these like big four, like what does the top end of this market look like? Like, are these really, really crazy good businesses? I guess when you think about like right now baseline, it sounds like you guys have like basically figured out how to make things through just process and automation and building technology like 2.5x. It sounds like roughly more efficient than like a Deloitte baseline or something. But like, if you think about like Deloitte's business being, okay, we could do the same amount of revenue or say have, the same number of customers with, 50% less staff, obviously that dramatically changes their business. But like, are these already the sort of KPMGs and Deloittes of the world? Are these like pretty good businesses? Are they doing like 5% net margins? Like how do you look at this? And then like, what do you imagine like a really big company in this space that's sort of, AI first gets to from like a marginal perspective?
Yeah, I mean, I think every large accounting firm is thinking about this. The big four, each of them have, 100,000 plus team members, and they're all thinking about, how do they scale? How do they do more with less? It's just such a giant machine to impact that change, they think about things like digital transformation, which is, a funny word for like, let's use more technology. And I think they're still in that era.
Let's move off of on-prem Salesforce. Salesforce in the cloud. That's gonna
Let's use this thing called SaaS. So yeah, I think, but I think they're smart. You know, they've built these massive companies that are doing like 100 billion. You know, each of them are doing 20 billion or more in revenue. You know, the way that those businesses are structured are as partnerships, and they're sort of like, you know, franchises in some ways, where the partners sort of own a big chunk of the company and are sort of you know, optimizing the business for profits and distributing those across the partnership. And so I imagine they're pretty profitable as is. And you know, I think thinking about, you know, the agentification of accounting firms, I think that's definitely coming. There's definitely companies building certain tools, agents for accountants, and then there's companies like Fondo that are like fully vertically integrated, building the whole stack, selling directly to the companies. So I think eventually, which is great for all of the founders and companies here, like it's just going to become easier and more affordable to get this done. And it's going to keep getting done faster. And I think Fondo is going to be the company that really leads that specifically for startups. But I think eventually, you know, the big four is going to buy a company, buy multiple companies. They have to scale efficiency, because 75% of CPAs could retire in the next like 15 years. I think that's the stat. And so, you know, and there's more and more companies being incorporated every year. So, and more companies getting funded. So like the need for accounting services is only growing, and the supply of accountants is just going down. So like you have to do more with less.
Yep. I remember one of my college roommates was studying finance and accounting, and he went to Deloitte right after. Well, he got an MBA and then got a CFA and then went to Deloitte. And I remember him telling me, like, when we were 21, he's like, look, the next 30 years is going to be brutal for me, but when I'm like 55, life is going to be really, really sweet. Anyways, he lasted 2 years at Deloitte. That's my Deloitte story.
That's how it goes. That's how it goes. There's like the partner track. I mean, it's a great career to go work at a large accounting firm. And like, there's a very clear path to go from like junior associate to partner in like 15 years. And if you can, if you love it and you can grind, you can survive and be a partner and make lots of money.
Yep.
It's like being a founder, except, you know, it's more guaranteed that you'll become a successful partner.
More guaranteed with capped upside. Yeah.
With capped upside. Yeah.
I mean, there are whole industries that mimic this, right? Private equity, hedge funds, investment banking, being at a prestigious law firm, you know, the big law type stuff, big consulting, like where you're expected to just like sacrifice your health, family, future, time for 15 years with this pot of gold at the end. And it's interesting to see that I think for a number of these industries, AI is potentially going to break that entire process down, because so much of what they were having like your Harvard MBA grad do, you know, as an associate, say at a private equity firm, like what happens when that stuff gets relatively automated, right? And you don't have anything for those people to do. So the treadmill of, hey, come in and kill yourself for 15 years, like it's starting to threaten a lot of that. And I don't know where it's going to go, but
yeah, it's interesting. It's like, in some ways, you know, it definitely sort of scales out each of those individuals to produce more. You know, you can sort of like iterate on like 20 different cycles of a PowerPoint in like, you know, 10 minutes, but you're probably going to still sit there and obsess over the details and change this and that. And, you know, I feel like the time is going to get filled with some kind of work. It's just about like, you know, what is that work going to look like? And then how many associates do you need every year? And that's going to be interesting to see.
Well, the good news, I think, in favor of those, you know, the reduction in those type of the jobs is people aren't having kids. So there's fewer young people to compete over those jobs. So I don't know. I don't know where it'll go. It just is one of those things where it always just seemed like an trade-off in life to make when you had choices, which was, hey, come live in hell for 20 years. And then at the end of the year, you'll have a portfolio business that will pay you millions of dollars, but you just blew your 20s and 30s and probably have a liver that looks like it, right? Because of the amount of client dinners you had to do.
Totally. It's brutal. It's brutal, but sometimes it pays off. Sometimes you
Yeah.
get that promotion.
Totally. What are the for founders who are, you know, have a Delaware C corp and are going down the sort of venture backed route, like what are the opportunities and like things that they should be looking out for? I know that there's probably, I don't know if you would describe it as like less flexible than like an LLC or an S corp or something, where you have just a lot more. You have, you know, actual profits and cash flow and like, you know, income and like, you know, dividends and things to pay out. Like in some ways, these are generally simpler businesses, although I'm not sure that's always the case. I think that there's a lot of YC founders who are like, hey, I'm on year 8 of my business. How do I turn this from a, you know, sort of venture-backed operation into something that, you know, could pay dividends, or how do I buy my investors off the cap table?
Yep.
But obviously you have like these like technology credits that sort of came up, you know, a few years ago. You have, you know, your like franchise tax payments. I guess, like, what are the big things that you feel like founders are, you know, like possibly dropping the ball on, or when people come to you and they're like, I feel super behind in XYZ area, like that you guys are sort of rescuing founders from?
Yeah, so I think there's a lot of really great things about having a C corp. So one of those things is tax planning is much more simple. Building your company as a C corp is so standardized that all of the like creative thinking that you could do can go completely into your company and building your product and how you're going to get customers. Versus, you know, as a pass-through entity like an LLC or an S corp, you might be thinking a lot more about tax optimization, and then your personal taxes are tied into it. As a C corp, it's a completely separate entity. It's taxed as itself, and nothing passes through to you unless it's through a stock sale or you know, your payroll or bonuses. You could also do dividends, but those are super rare for startups. Maybe eventually, if you're profitable and you're at a scale, you can do those distributions as dividends and things like that. But for the most part, for the first like 5+ years of your startup, it's very standardized. And so, like as a Delaware C corp, you know, it's very standardized for stock, right? You incorporate as a Delaware C corp. You authorize 10 million shares, you issue 8 million shares to the founders, you keep 2 million for the option pool. Like that's very standard. All the stock is distributed with a 1-year cliff and a 4-year vest. Okay, don't need to think about that. Don't need to innovate there. From a tax compliance standpoint, there's like 3 deadlines every year. There's March 1st, which is the Delaware franchise tax, which is, there's 2 important things about Delaware franchise tax that founders don't know. One is that they're going to get a letter from Delaware that says they owe $80,000. And the second thing is that Delaware in the tax code gives you the option to pay the tax, to calculate the tax 2 different methods. One yields a $450 tax and one will yield the $80,000. And you can choose which one you want to do, and you can choose the lower one. And so, but they default send you this letter for $80,000. So March 1st, Delaware franchise tax is due. First year is going to be $450. The third deadline is April 15th. That's going to be your federal and state. Are you guys falling asleep yet? Federal and state.
Girdley fully fell asleep.
He's gone. You know, April 15th is the federal and state tax deadline or extension. And this is where a lot of companies don't realize that even if you have no revenue or no profits, you still need to file to stay in compliance. But there are some benefits to filing. So even if you have no revenue or no profits, you can get these tax credits. So it's called the R&D tax credit. Pretty much every tech startup is going to qualify, and it's up to $500,000 a year that you can get back as a cashback check to the IRS. So I think over your company's time, I mean, we got you hundreds of thousands of dollars back in tax credits, and that's totally based on payroll. And so that's what you file with your tax filing. The next one is the October 15th. And this is the last chance. This one's coming up in less than a month. It's the last chance to file to take advantage of those credits. So to take advantage of the R&D tax credit when you're not profitable, you have to file it on time. And so October 15th is the extended tax deadline. That's the last time you can file that. So that's like tax planning for startups. You know, it's just filing on time and taking advantage of the tax credit that you get as a startup. And it's, you know, it's not about like optimizing for depreciation or, you know, different things that come up a lot in pass-through entities. So it's pretty vanilla on the tax planning side. Maximize your tax credits, minimize the taxes that you pay through these, you know, very basic strategies. And then, you know, Fondo kind of puts all of that on autopilot. So you sign up, we handle Delaware, we handle the states, we handle the federal, and we handle getting you that cash back from the IRS.
And are the tax credits like, do you expect them to persist, or like, does the government give like guidance on this, or is it just like, they might just stop existing 1 year, they might increase 1 year, they might decrease? Like, how has that sort of shifted or evolved over the last few years?
So it's definitely evolved. This credit started, 30 plus years ago, and each administration has sometimes done different things with it. So one thing changed in 2022, which was the way that your taxable income was calculated for startups. So it did get a little complicated there from 2022 through 2024, but it just got reversed. But basically what happened was you could no longer expense engineering salaries. You had to amortize those over a period of time for domestic and over a longer period of time for international. So what that meant was, if you did have income of say $1 million and you had engineering salaries of $1 million, you'd owe nothing, right? Your taxable income would be zero. But this rule that came out in 2022 is called Section 174. It said, actually, you can't take that million in expenses. In your first year, you can only take, 1/10 of that. And so now you have a 900,000 sort of like phantom profit that you got to pay taxes on. And so that really threw off a lot of tax planning for startups. That made it difficult. It affected your tax credit, and it got really complicated. But that was just reversed in the one big beautiful bill that passed earlier this year. And so now companies are in a position where if they did go through that, where they did pay a tax or they missed out on a tax credit because of the way their taxes were calculated, 2022 through 2024, now you have a chance to either amend it or like take all those prior year credits this year in 2020 for when you're filing 2025. So there is an opportunity right now to get even more back as a tax credit, or get money back if you overpaid your taxes in prior years. So this, every once in a while, there's a change like this that makes taxes a little bit more complicated, which just, back to just outsource it to somebody who knows what they're doing, or a company that knows what they're doing, like Fondo. So we specialize in this, and that just helps you, remove the calculus of like, should I do this? Should I do that? And if you're not working with anyone else yet, I'll drop a link to section 174.tryfondo.com. You can do a little quiz to see if you should amend or if you should take the full credit this year.
Cool. What are you excited about on the investing side of the house? Like you've had several winners, the Flexports and the Ripplings. Obviously, it feels like there's been this, like, I think if you follow Twitter, it feels like this like seismic step change toward all of this AI stuff. I personally think a lot of it's very overblown. Humans will still have jobs in 10 years, et cetera. But like, what do you think? What are you seeing? What types of companies are you investing in that you think like 10 or 15 years from now, like really categorically or from like a vertical perspective, have the opportunity to be like sort of the next Flexports and Ripplings?
Yeah, I mean, I think to your point of like, we're all still going to have jobs. I mean, a lot of the software we're building is to make our accountants like super accountants. And I think there's a lot of companies building that, and there's a lot of companies building pure AI, the AI SDRs and things like that. And it's still TBD to see. Well, maybe it's not TBD. Like eventually, AI is going to get so good that it can do more and more, and these jobs are kind of going to change. But I think people are still going to have jobs. Their skills and experience is still going to be super valuable in whatever they're doing. They may not be, drafting a tax return, but they're reviewing it. They're finding new ways to optimize to get more credits and things like that. So what's happening from the investing lens? It's interesting because I've done over 100 investments now, and I feel like you still feel like you don't. At least I don't know. I don't know where it's going. I can't really tell. But I think what's obvious is that there are companies that are growing way faster than ever before, and like we see the headlines on X like every day of like Mercor, 11 Labs, Replit, these companies that are going from like 0 to 50 million, 0 to 100 to 500 million in ARR in like a couple years. And so it totally breaks like this, triple, double mentality that a lot of investors have around, okay, that's a great breakout company if you can at least do that. So it sort of changes like what is great, it kind of adds this new like S tier profile. And then, what does it mean for the rest of us that are not growing 0 to 100 million in, 1 year? I don't know. It's interesting to see how much investors expect that massive acceleration of growth for AI companies versus like these are just outliers.
Mm-hmm.
Yeah.
So how do you think about the pros and cons of angel investing from your position? Like, so obviously the pro is you have insights into real numbers and not Twitter bullshit in terms of what's happening in the market. So, and you just alluded to some of that. So that's a pro. I think the con would be, the first one that comes to mind is obviously somebody's going to be pissed at you if they're a customer and they think that in the future you invest in a company that in the future may be a competitor of theirs, or they may see them as a competitor right now or a threat. So how do you think about kind of that trade-off and how are you navigating it?
Yeah, I definitely, I definitely see that perspective, and I separate, investing from like Fondo pretty much completely. I do meet founders sometimes through, being CEO of Fondo, but the interesting thing is, financial metrics early on are not indicative of future success of a company. I think that's one, having been investing in startups, in the pre-seed, like seed stage, those early revenue numbers or no revenue doesn't mean it's not going to break out. And so for me, it's really trying to meet founders and understand their motivation and like grit and willingness to grind through. As we all know, building a business is such a grind with so many ups and downs. It's ultimately it comes down to the founder or the founders and how committed they are to like making this a huge company.
Awesome. Well, cool. I know we're at time. If people want to work with Fondo or they want to get in touch to you as an angel, like what are the best places to find you, to find Fondo, to get in touch?
Yeah, hit me up on X. We're at TryFondo. I'm at DavJ on X. And then if you need help with the upcoming tax deadline on October 15th, we are fondo.com, where you can put your corporate taxes on autopilot.
Awesome. Cool, man. Good seeing you. Thanks for coming on.
Thanks
for having me on, guys.
Appreciate it.
Nice to meet you. Take care.
I gotta get good at like when we're ready to check somebody out. Like I've got my finger on the button so I could just like get them out of here. Or if we get some more of these open phone sponsorship dollars, we could hire somebody to be a producer. Let's go. Let's go. Cool. All right. We're almost at time. So it seems like wins today, not to toot my own Girdley horn, but I didn't get stomped so much in terms of viewers today. I was
we're both like above 3K, which is great.
I think definitely that's a sign about the economy that my followers are losing jobs. So yeah, they have plenty of free time.
My grifter crypto followers are getting internet access cut off in their mom's basements, and your followers are losing that. This is a disaster. Please, open phone. We need another month. We can figure this out together. We need the sponsorship dollars. It's going to be okay.
It could also be the case that my Twitter is just doing better. I actually I'm not doing jokes anymore. No more memes, no more political commentary. I'm just doing exactly what Nikita said to do. And I've like, my rebellious contrarian nature is like, okay, cool. I'm going to write you one thing a day. It's going to be some insight from the world of business ownership and leadership, and you're going to like it. And there'll be no Chili's jokes, except for maybe every once in a while when I have a couple beers.
Yep. It is the last thing here. It is fascinating. I think X will eventually start doing this, but like on LinkedIn right now, it's crazy how much they are prioritizing really thoughtful commentary, to the extent that things will regularly get resurfaced like 2 and 3 weeks later. And if you do like a timeline refresh, you'll see all these posts and it's like posted 3 weeks ago. And it's like, there's actually like so little actually good content as dictated by LinkedIn on LinkedIn, that they like, even though I follow like 20,000 people, they need to pull in tweets from or posts from 2-3 weeks ago to like fill the timeline. So there's still a huge opportunity on LinkedIn. So yeah, well, cool, good show.
All right, good guests. So we're back next Tuesday, and then we're gonna take a week off because I've got travel, and then we'll be back on the 7th. So next Tuesday we've got 2 accountants in a row. Calm down.
Boy.
Mitchell Baldridge, America's accountant. That's how Nick Huber tried to brand Mitchell Baldridge. He's Girdley's accountant as far as I'm concerned.
Yep.
And Ramin Sheath.
Yeah.
With
a new company, I think, to talk about. I don't know what he's doing, but good guy.
Both of these folks are nice, sweet individuals. Just incredible. So super well done. All right, man. Well, good job this week. We'll catch you later.
All right. Next week.